With over 10 years in wealth and asset management industry, I've seen plenty of ups and downs in the Swiss property market, where prices have increased a lot recently. Today, I will share 5 common mistakes people make when buying property in Switzerland and how you can avoid them to make smarter investments. If you're new here, I'm Charlene. I'm a chartered financial analyst in Zurich, Switzerland. Make sure to hit that subscribe button for more inside advice on personal finance and investing. Last week, my friends in Zurich shared a really frustrating experience. They have the money and the down payment or deposit ready, but finding the right property has been a nightmare. Now, when they try to buy new apartments, the best ones with nice views, good price, they sell out super fast. And the second-hand market is almost like an auction, and it's really tough to win. And here's something really interesting about the properties you find on online platforms such as HomeGate or ImmoScout24. Often, these are the ones that local agents or developers haven't been able to sell through their usual networks. Let's talk about why this happens and what it means for you if you are looking to buy. In a lot of real estate markets, especially the hot ones, the best spots, the ones, for example, in great locations with top features and priced just right, they get snapped up really quickly. Those local real estate agents, they usually have a list of buyers or investors who they call as soon as those gems hit the market. And sometimes these properties are sold before they even make it to the public listings. And then there are properties that are not quite as nice. They might be in less desirable areas, a bit pricey, or have some issues. And these properties tend to stick around unsold for longer. So what happens? Sellers and agents, they put these on popular websites, hoping to catch the attention of buyers who are not in town to check things out in person, or who may not know all the ins and outs of the local scene. Here's the tip. If you're running into walls finding the right place, consider connecting directly with local agents or developers. Get on their radar so that you're one of the first they call when a good property comes up. And this way, you're in a better position to grab those top-notch properties before they even hit the wider markets. And it's all about being in the right place at the right time. And having a local insider can make all the difference. You know how locals do it. So for example, whenever they spot new construction while driving around in the city, for example, they don't wait. They already call the developer or the agent right away. Usually there's a number on the construction site. So when you drive around in the city, don't miss that part. Before we move on to the next chapter, I just wanted to say if so far you find the video helpful, please do give me a like and subscribe. And also subscribe to my personal newsletter where I share the top tips on investing and personal finance. In recent years, property values in Switzerland have been on the rise. I think it's a trend driven by lower interest rates, lower here, compared to the rest of the world, right? And strong demand and limited housing supply. And you may have heard the news that Zurich has become the hottest housing market in Europe, with prices surging past London and Paris. And this upward trend makes it even more crucial to stay informed about current valuations. For example, I heard from some friends in Geneva who were looking to buy a home. They fell in love with property, and then they caught up in excitement, and they didn't just stop to evaluate whether the price was in line with the market. They ended up paying more than what was reasonable, as they later found out that similar properties nearby were selling for much less. I don't think you want to be one of them. And this is why understanding the market, for example, getting a proper valuation, is essential. In Switzerland's dynamic real estate market, I would say the most attractive properties, those in the best locations with the best features and price right, sell very quickly, often through direct contacts before they even hit public listings, as I mentioned. And there are also properties that are priced above their market value are not selling as quickly, and these often end up on international websites targeting buyers who may not be very familiar with local market conditions. And such properties can seem like very good deals, but may actually be overpriced. And here's the tip: before making any offers, always check the property's valuation and get a clear picture of local market conditions. For example, the place where I live now here, Overlooking, Zurich, the average price is around 15,000 Swiss franc per square meter, whereas in Gold Coast, for example, the average price is 20,000 square meter. Consider hiring a local expert or appraiser. This can help ensure you're not paying above the market rate and gives you a solid footing for your investment. And just as locals keep an eye out for new opportunities, keep yourself informed and verify market trends regularly. A little bit of due diligence can help you secure the best possible deal in a growing market. And over the last 10 years, the Swiss francs have gotten quite a bit stronger against the USD and the euro, right? Around 20% stronger against USD and 15% against euro. Imagine this: you are from another country in Europe or the US, ready to buy a nice lakeside property in Switzerland, and this increase in the CHF, Swiss franc, make your dream home a lot pricier in dollar terms or in Europe than you had planned. Everything seemed perfect until the exchange rate shifted unexpectedly, and suddenly the price in USD increased and you ended up paying significantly more than initially planned. And this story isn't unique. Switzerland's stable economy and strong currency made it a hotspot for international buyers. But currency fluctuations can dramatically affect the final cost of your property. For example, when the Swiss franc strengthens against your home currency, what looked like a good deal can quickly become so expensive. But here's what you can do. Always factor in potential currency changes when budgeting for a property overseas. Consider talking to a financial advisor who understands currency markets. They might recommend options like opening a local bank account or using financial instruments to hedge against significant fluctuations. Just as you would with local market trends, keep an eye on currency trends as well and plan your finances accordingly. And here's the story. A couple I know moved from Italy to a small town in Switzerland, attracted by, gorgeous house at a great price and the really nice view. But what they didn't account for was the challenge of fitting into a community with very different social norms and a local language they didn't speak. They felt isolated because they overlooked the importance of community integration, which took a toll on their happiness and eventually led them to move back. And this mistake is quite common and easy to make. When buying property, especially in another country, it's very important to think about more than just the house itself. The community and culture fit are just as important. Are you comfortable with the local customs, language, and lifestyle? Can you see yourself truly becoming part of the community? Here's what you can do. Spend some time in the area before you commit to buying. Talk to locals, visit community centers, and really get a feel for the neighborhood's vibe. And this can be a great way to gauge whether you fit in or feel out of place. And remember, a house is more than just walls and a roof. It's your entry point into a community. Make sure it's a community where you can be happy and thrive. And by considering these factors carefully, you can avoid feeling disconnected and make your new house a true home. An ex-colleague of mine bought a stunning apartment right in canton of Bern. It was perfect for him at the time, but when he decided to move a few years later, he struggled to sell it. And this apartment was in an area that had become oversaturated with similar properties, and which drove price down and made it hard to find a buyer. And this is a common oversight, not thinking about the future sellability of a property or liquidity. Liquidity is just a fancy way of saying how easily and quickly you can turn an asset like a house into cash. High liquidity means you can sell it fast without having to drop the price too much. But here's what you can do. Consider factors that might impact the liquidity of your property in the future, and how is the area developing, right? And what are the trends in the local property market? And are there plans that could enhance or decrease the area's attractiveness? If you like this video, you will definitely like my video on how to buy a Swiss house as a foreigner, a step-by-step guide, where I share my own experience of buying a house in Switzerland as a foreigner. I will see you in the next video.